Hey everybody, Economic Ninja here. I hope you're doing great. Got a story about the Japanese yen. It's very important to follow what's going on with the yen because remember, the yen is falling compared to the dollar pretty rapidly. And Japan has already warned that if it keeps happening, they may be forced to sell our treasuries, our debt, our dollars to be able to backstop and hold that their own currency up. They are a massive holder of our government debt, and if they did that, it could cause our debt to slide and harder for us to sell bonds, okay? So this is very important. Stories out of Reuters, it says Japan warns of action against excessive yen volatility. It says Japanese Finance Minister Shikuni Suzuki said authorities were ready to take appropriate action against excessive exchange rate volatility, repeating his warnings to yen bears as Tokyo tries to prevent a destabilizing fall in the currency. Suzuki stopped short of threatening to take decisive action against excessive moves, language the minister used last week when the yen slumped to a 34-year low, suggesting officials are keeping their powder dry as they watch how the currency moves play out. Let me explain this in really easy layman terms. The yen's falling fast. And now Japan, rather than blaming themselves, their policies for doing this, they've just brought up interest rates for like the first time in forever, right? Because they're trying to give people a reason to hold on to the currency. Don't sell, don't short, it's collapsing. Their economy's starting to collapse. There are economies all over the world collapsing, right? Just like ours. But this one's very important. They're one of our largest holders, if not the largest holder of outside of our country of US debt. So if they are forced to sell, which they know the consequences of that as well, if a large seller enters the market and starts liquidating, it's going to cause all of our debt to start going down. Well, that's what they're doing essentially now. They're going after traders. They're saying, hey, you're the bad person. You're selling, you're shorting. Stop it. You're causing volatility. And they're trying to put some like vanilla coating on the top of this so that most people don't realize what's happening. This is a very, very big deal. Now he says, all we can say, this is Suzuki or whatever his name is, all we could say is that we will take appropriate action against excessive volatility without ruling out any options. Suzuki told a regular on a news conference on Tuesday when asked about the yen's continued falls. So see what's happening is he is straight up threatening. I'm threatening you. If you're going to do something, I'm going to do something bad. If you short it, if you cause the volatility, if you sell it, it's like, and they're like, well, what are you going to do? I'm not going to tell you because crap, they're grasping at straws right now. And I can guarantee you their finance ministers are on the phones with the Federal Reserve and like, what are you going to do? I don't know. Like, we may have to sell. This is a big deal. Now, remember, China held a special summit, an Asian sort of summit with Japan and with South Korea. China is trying to woo these countries in. And Japan is listening. I'm telling you, they're going to eventually join BRICS. BRICS is getting so big and powerful, and there's so much trade there that eventually Japan will go into there. That's my call. And let me know down below if you agree with that. And it's a big deal because as we lose not only trading partners, and not saying that we're going to lose full trade with these countries, but we lose the inability to offload our debt onto them, right? Hey, buy our dollars. So we have an active buyer in our treasury markets. If they stop actively buying and they're starting to sell our treasuries, we're going to go into hyperinflation. Like, this is not a joke. And people need to understand that. And that's why it's so important not to just look at your local economy and the nation's economy, the US national economy, but it's looking at all these other countries and the problems that they have right now. Now it says here the yen has been in a downtrend despite the Bank of Japan's decision last month to end 8 years of negative interest rates, as traders interpreted its dovish language as signaling that the next rate hike will be some time away. The U.S. Federal Reserve Chair Jerome Powell's remarks on Friday that there was no need to be in a hurry to cut interest rates kept the dollar firm by cementing market expectations that the gap between the U.S. and Japanese rates will stay wide. And that's another thing. Japan knows that the second the Federal Reserve lowers rates, that's going to cause the dollar to become weakened. And that's a good thing for Japan. It's going to sort of keep their yen dollar stable, like where it is, even though it's total crap right now. But when the Federal Reserve's going, crap, we can't lower rates because inflation is getting out of control. We're not crushing the consumer. The consumer's still out spending. This is absolutely insane. They're going out and getting more debt. We got to keep rates higher for longer. Well, that keeps added pressure not only on the yen, but on other currencies around the world. This is the most amazing crash ever. And what's really cool about this, and I gotta say, you get to see this. This is not like the people of 1929 that just woke up one morning and they wake up and they see the newspapers, stock market's falling, banks are crashing, they're closing their doors, we're all screwed. You get to see this play out. Just like I promised when we started the channel 4 years ago, this is happening. And we're gonna take you through each little step. So when somebody tells you, hey, real estate's never gonna go down, like, they're nuts. They don't understand macroeconomics, the big picture. Think about this. This is exciting stuff. It says markets remain on alert for the chance of intervention by Tokyo as the dollar hovers around 151.6 yen in Asia on Tuesday, near the 34-year high. Remember, I told you about, 4 or 5 months ago, I said, watch that 150 number, yen to dollars. It hits that 150, that's bad territory. Now we're at 151, and the ministers over at Tokyo, our finance ministers, are freaking out. It's a big deal because if it stays elevated like that, it's just going to get worse. Japanese authorities, including Suzuki, had not used the same language since then. The yen had been declining quite sharply back then. Boy, any of you Forex traders, I bet, are just crushing it right now, dollar to yen trades. It says, language aside, we're now watching markets with a strong sense of urgency, Suzuki said. We are carefully watching daily market moves, he added. Think about this, the word urgency and watching daily. This is a big deal. That 150 number was serious. Suzuki said monetary policy was only among many factors that affect currency moves, such as each country's current account balance, price developments, geopolitical risks, market sentiment, and speculative moves. Now, think about this. They can't just drop rates now. They can't go into negative rates. That's going to devalue the currency even more. What they need to do, and they've already said it, we need to sell U.S. debt. We're going to have to sell that, and what they want to do is they want to go out into their own currency market and buy their own currency. That's going to strengthen it. They're going to take it off the market. It's a big deal. Japan, everyone seems to think that, oh, you could just print money forever. You can't. You can't do it. And let me please understand this. The reason why Japan was able to go zero, printing money and these low rates for so long was because they had such a strong economy. They had so much to sell the world that they were able to find enough buyers for their stuff that it held up their economy. But now, that's not happening. Why? Because the economies around the world are collapsing and they're buying less. It's a big deal. Everyone wake up. Yen is going to crash. I believe the Japanese are going to have to sell U.S. debt, and that's going to make our interest rates skyrocket. Hope you have a great day. The Economic Ninja is out.